Good afternoon, everybody, for your Taco Trivia Tuesday. It is the Trader Merlin show. We have so much to talk about today, and hopefully I will get to all of it by the end of today's program. As you guys know, I will be taking the next 8 days off. I think, actually, I think it's about even more than that. So tomorrow I'll be leaving for Ireland, and I will be back to do a show for you on Friday, not this coming Friday, but the week after. I don't know what date that is. I'll tell you exactly right now so I can look at the calendar. Friday the 9th will be the next day I get to do live. So I'll be arriving late on the 8th, and I will just jump right into the program with you. I'll probably look really scruffy and disheveled, but hey, no more than normal, right? All right, let's talk about the news of the day. The news du jour, since we're on the French Olympic trail here. We have troubles for Microsoft. I was like, oh boy. You know, we talked about this last week. I told you guys not only on this show, but also my Monday morning must knows that I really expect this to be the most volatile week of the quarter, simply because Microsoft, Meta, Apple, Amazon all reporting this week. And because of what happened with Google last week, I was really concerned. I didn't want to sell puts last week on the NASDAQ when it was down just a little bit, simply because I thought that the hammer to drop would be Microsoft. If the comments from Alphabet and Google were, hey, we spent a ton of money on AI, but we're not seeing that rate of return yet, Microsoft should have done something similar. And lo and behold, that's kind of what happened out there today. So I'm going to start us off by looking at the numbers for Microsoft. It's kind of I almost want to say clickbait. I hate clickbait, right? It's just, I'm not a big fan of clickbait. But anyway, I got this ominous picture of a building. It looks like on fire with the dark clouds and smoke billowing out of it with the Microsoft logo right there. Well, what AI deems to be the Microsoft logo. And I wrote troubles for Microsoft. I'll be honest, when you look at these numbers, they're really good. They're good across the board, which may make an opportunity for you later this week. Here is some of the numbers just off the top. I meant to animate these in one by one. Big F says, if you have not already, make sure. Yes, so I've got the Guinness Factory on the list with the VIP tour and the Jameson Distillery. Of course, got to do the distillery. But yes, I will have a great time in Ireland. Looking forward to it. So let's talk about the good. The good for Microsoft is they came out at $2.95 versus $2.93. So they expected $2.93. Hey, they beat. On all fronts, that's going to be a good thing if you can beat earnings. Now, kind of depends on the estimate here. According to Zacks, which I use a lot, you can see here Zacks had them coming out at $2.90, but they reported $2.95. So either way, they beat, whether it was the $2.90 expectation or the $2.93. All in all, that's good. Revenue, they expected it to be $64.39 billion of revenue, came out at $64.73. So you got yourself an extra, $400 million worth of revenue. Great. Revenue year over year up 15%. That's great. I mean, obviously, you'd like to have higher, but 15 is pretty good. Net income. So net income went from $20 billion up to $22.04 billion. So, hey, there you go. You got another positive piece. So all that looks good. And I kind of half-heartedly call this the bad because I put a question mark here like, is this really the bad? Their cloud services grew 29%. Analysts expected 31%. I think most people in the room, if you had 29% growth in a business segment, that's really good. Of course, doing that year over year is the big trick. Analysts expected 31%. So is this worth the decline that happened to Microsoft after hours? We'll check that here in just a second. Now, of that 29%, 8 points of that came from AI services. Now, I didn't get to listen to the full press conference and see all the comments that were made about AI spending and infrastructure costs and what the rate of return on those investments are, but obviously it was not well received by the market. So let's go take a peek at what's happening with Mr. Softy right now, MSFT. Here you go. Right now down 6.42%. So this could be a good opportunity for somebody looking for bottom fishing tomorrow. But there's your reaction to it, right? Real quick, jolt to the downside. It's weird, this little E here has them missing earnings. Yeah, I'm seeing different numbers here. I don't know why these numbers are all different, but I'm going to go off the original number I have, which I believe to be correct, which is 295. They're saying that they reported 291. I don't know what adjustment that might be, but it looks to me on all fronts like they have actually beat earnings on all fronts. So all in all, pretty darn good. I'm surprised at the reaction. Now check this table out. This shows you growth for that specific quarter. So you have, I think actually this might be year over year growth. Azure and other cloud services, yeah. So year over year, let me make sure that this is correct because I don't want to say the wrong thing. No, 39% for the quarter. So you can see cloud services up here was kind of this biggest growing piece. You had the highest percentage growth for Azure and other cloud services, which would be AI. And yeah, this one dropped. It went from 31% down to 29%. Okay, fine. That's not that big of a miss. But everything here, you see dynamic products like cloud services, 16%, Office 365 at a 13%, commercial products are up 12%. The consumer product side, only 3%. So, okay, fine. Everything else was positive. Xbox up 61%, so great moves there. The only one here was Windows OEM and what we saw with customer products. Office consumer products. So all in all, these numbers look really good for Microsoft. So I gotta question this and say, does this present a buying opportunity for Microsoft? It's a tricky one. I think I would probably myself look more towards the broader market, which we'll look at here in just a second. But let's put a line at right where we are. I'm going to put it at the lows of where we hit today, which was 389.22. And then I'll look at the daily and see if this lines up with an area of strong demand on the... Oh, wow. Look at that. I mean, this would certainly be a target for me as a potential buy point for Microsoft. And that's literally the dead low that we hit just a couple minutes ago, which was going to be 389.22. Right now we're at 395.90, so it's bounced a little bit in the after hours. But we are all the way down here at this bottom red line. Let me get all these other lines out here so it doesn't confuse the viewers. We're all the way down at this bottom red line here. That's pretty good. We hit that low, and now it's bounced up to this blue line in the after hour session. Big Ed, we had that conversation a couple days ago. Is this the rotation out of tech for right now? And it does feel that way. It does more and more feel like there's going to be a continued kind of move down in tech. But how low do we go, right? Moving to say that tech is out of favor doesn't mean a full-on implosion and 90% drops in tech, right? There's no way that our markets, our economy would function without Microsoft, without Google, without Amazon, without Apple. Those companies are not just going to shrivel up and disappear. So for me, it's a question of at what point do I look at it and go, okay, I'm good to jump in here. I'm good to buy into this one. And there may be some great opportunities over the next couple days or weeks from a put selling perspective, because right now, as of tomorrow morning, if Microsoft does stay down where it's at, the put premiums could be very high or much higher than normal, giving you guys a good opportunity to sell some puts and collect more premium and potentially buy this lower. I mean, if you look at where Microsoft hit today, that would give it a decline of roughly 17%. Hey, Les, good to see you. And where does that money go in the rotation? Right, that's the big question. And you can look down here at I'll get to that in just a second, but I'm looking at it as where's the buying opportunities here? If you think that there's more downside moves, you could look at these other kind of turning points, like the one down around 366.50 on Microsoft. Maybe going all the way back down to 309. It certainly could get down to those levels. I'm not saying that it can't. But this market still does feel like there's strength there. We're seeing economic data, like we talked about yesterday, slowing down a little bit, but not enough to, in my opinion, warrant a 34% decline in Microsoft, which would be that low of 309 that we have drawn on your screen there. So is the AI trend dead? No, absolutely not. I made this comparison a while back, Margaret. I think it's going to be very similar to the .com bubble. I think it's going to be more compressed, which is this huge surge up in spending for AI across the board. I mean, even companies that have no business in AI are now going, hey, we've got AI, right? There's a great meme. You guys know that it's the scene, I think, from Wolf of Wall Street, where Leonardo DiCaprio hands in the pen and says, sell me this pen, right? And he's trying to get the guy to sell him. And the second picture shows the guy with the pen and goes, it's got AI in it. I mean, that's pretty much what our markets are doing right now. I think that there's this huge rush into AI. I do expect and have expected a pullback in the entire AI segment, but I do think it'll find a footing. And as we roll out new products, services, and I think that we get better applications, we get that next use case for AI, not ChatGPT, but more on a business level that corporations will be implementing. then I think you see the next leg up. So I think it's just a pullback down, and then we'll get that next leg to the upside. So I personally think it's just going to represent a good buying opportunity for you. As I mentioned on yesterday's show, I don't believe that we're going to see a recession this year. I think that may come next year, but there was some data points that we looked at that were slowing down a little bit, right? We had GDP the past couple of quarters has started to decline. You have unemployment rising. So it's not the perfect picture for just buy it because markets are going to guarantee to go up. But buying, Microsoft at a 16% discount, well, that might not be a bad thing. And looking at these charts, you could be selling premium and maybe even collecting it much lower. Let's say this middle red line where it drops down to, let's say, 22% slot. Okay, great. You have other companies that reported earnings as well, which will give you plenty. Speaking of AI, Nvidia is taking a grab. Yeah, they're down. We talked about it a couple months back, where I said a 20% pullback would be no surprise and kind of welcome, at least from my perspective, for Nvidia. We're past that now. Right, we've now eclipsed that little pullback line, and here we are now down on Nvidia, down 26%. My guess is it's going to continue to slide. My guess is you'll probably go down, close this gap, pretty sure right around 95.50. And then the question is, do we end up heading even lower, getting down to, let's say, this pivot at $74.41. I will tell you this. If Nvidia does get down to $74, I'm definitely a buyer. Absolutely a buyer of Nvidia at that point. Part of me says crash. I know many of you are like, no, don't crash. I have shares of this. Protect that. Protecting positions is an easy thing to do. And on my CrowdStrike position, right? You guys saw the CrowdStrike one yesterday. I sold the 250s, and then all of a sudden that thing got sued by Delta. One of the airlines sued it. All right. I just bought some directional puts and hedged my position. Yes, it cost me a bunch of money, but nowhere near what I would have lost had I just kept those positions open. So if you have positions, you could certainly say buy some puts directionally and protect yourself from more downside movement on those positions you have if you don't want to get rid of those. So JD, my target is 97.27 for JD. 97. All right. I mean, it certainly could get there. I would be a little bit shocked if it fell that far. I mean, if it got all the way down to that level there, you're talking about a 45% slot. I am definitely a buyer. Because my Nvidia puts say crash, my position says no, don't. Yeah, I know. Yeah, and that's an interesting point. Big Eb has been doing the right thing, and it's been costing him profits. As the Nvidia keeps rallying up, he's buying puts directionally on it as a hedge. And you've been doing the right thing, Big Eb. I know you have, and you're probably frustrated. But now you're going, okay, I'm okay with this now. Because if Nvidia falls, 40, 50%, you're protected, or at least to some extent. I don't know if you have the full position covered through puts, but great. Let it fall and let you acquire more at a lower price. I mean, we should all be welcome. That's why you always have money set aside, have powder dry, so to speak, in this market. Let's see. What does Tom say here? Thank Liz. I will definitely have a good, safe travel. If you add PE ratios to your TradingView chart, you can look at Microsoft on a 5-year chart, and you will see that it has been bumping up against the PE ceiling. Huh. All right. Let me see if I can do that. I didn't know you could add on a PE ratio onto your chart, Tom. Maybe I'm in the wrong spot. Oh, there you go. Price to earnings. Price. There was the price to earnings ratio. Is that the one you want right there at the top? PE ratio to growth, PE earnings to growth ratio. I don't think that's what you want. Let's go price to earnings. Oh, there you go. Price to earnings ratio. I'd have to dig it deeper into this to know exactly what I want, but let's go into Microsoft. Well, yeah, I don't know. Right now it's got, if this is correct, it's showing a PE ratio of 36.7 on Microsoft, or 36.6. Okay. I don't see it hitting hitting the top there, but certainly the PE ratio we had here at the beginning of July, which was up around 40, you're becoming much more attractive. Oh, the 5-year. Let me do this a different time, Tom. I hate doing this stuff live when I'm making all kinds of errors in the process, but I will look at that one. That's an interesting way to look at it. Kind of historical track record for Microsoft, etc. But again, I think plenty of opportunity for those who might be looking at buying into some of these markets much lower, as it looks like they may be drifting lower. Now, you had other companies out there report earnings today too. Two of particular interest to me were AMD and Starbucks. Now, Starbucks came in line with expectations. Let's go SBUX. And they're up 2.55% after hours. There where this like little blue line is. So we've got this double bottom on Starbucks. It's gapping up tomorrow. Let's see if we get above this high that we established just a couple days ago, going back to July 19th, excuse me. That might be a trigger point for you guys to buy a breakout, as this looks like it's going to start to make some new highs. Even though they didn't have great earnings, you do have a double bottom, and if it starts to make some new highs, great. And the last one here that we'll look at before I dive into some other questions is look at AMD. So AMD reported earnings after hours as well. They did better than expected. They're up 6% in the after hour session, but this chart still doesn't look great. I forget why we had that red line on there, but you have this blue line right here is where we're currently in the after hour session at 147.50. Certainly much higher, but I don't see any breakouts, any trend reversals, any change of direction. It still feels like AMD is slowly going down here. It's making lower lows and lower highs on that one. Marcus, when I drive by Starbucks, the lines look very short and the parking lot is not packed. Yeah, I don't drink it myself, but I know that I know that deep down Starbucks, whether you want to admit it or not, is a drug dealer. Starbucks is a drug dealer. They sell narcotics by weight. We probably have some chemists in the room. By weight. No, I was going to say that's nicotine. Caffeine, certainly one of the most addictive things out there, and I have a lot of friends who are just absolutely addicted to coffee. And if they don't get coffee, they turn into some kind of mean animal. It's crazy. Anyway, I don't drink coffee, so it's nothing for me. All right, let me do a couple different pieces here. Too many folks working at home now, right? Well, I think what happens is you had you can go to Starbucks and buy yourself a $6 vanilla ice latte or vanilla iced coffee, right? $6. But I can go to McDonald's and get the same thing for $2. So you are getting increased competition. McDonald's certainly has a lion's share of the junk food traffic. But yeah, I don't know. I do like Starbucks as a company because they're positioned selling coffee, but there's so many different competitive coffee companies. And I know, like, when I have friends come to town, they don't want to go to Starbucks. They'd rather go to some local little startup coffee shop that's in, some tiny little strip mall. Well, cool. Fine. Let's do it. Let's see what are the questions that I have. What does my friend say about Nvidia now? His opinion will never change. His opinion will be buy Nvidia. Just buy the stock. He is a believer, and honestly, as an employee of a company, I would want my employee, like if this employee was working for me and he had that same passion and drive and just admiration for the company that he does for Nvidia, I'd want him working for me. They say that if you really want to be a good salesman, you got to believe in the product. And this guy absolutely believes in the product, and he just loves the company. He loves the culture. So, all right, cool. Let's see. Last question that came in a couple days ago on the YouTube channel. So Joe asked me, this is a rough transition, I know, but I want to get this out of the way before I forget about it because it tends to happen on the show. So what are the different types of bond ETFs that can help diversify a portfolio, like tips, etc.? There's a bunch of different bond ETFs out there. There's a ton of them. And again, it really depends on what you're looking for. You have short-term government bonds like SHY. Well, let's bring up the spreadsheet here because I made a little spreadsheet for you. And they're in no particular order, but these are just some of the big names. And you have at the top, I've got TLT, which is really long-term, 20-year plus bonds. You got the AGG. So there's a couple, AGG and BND. These are going to be like a diverse portfolio of bonds, short, intermediate, and longer term. You look at the BNDX, that's the Vanguard Total International. So if you want international exposure, which typically will give you higher yields, depends on the country, of course, but typically give you higher yields, that could work for you. You have government, which is GOVT. That's going to be iShares Treasury ETFs. SHY is 1 to 3 month Treasuries. And then since you mentioned tips, here is the TIP, right? TIP is a portfolio of TIPS. That's Treasury Inflation Protected Securities. Now, Joe, for your portfolio, if you go back 5 years, Bill Addis and myself were adamant that rates had one way to go, and that was going to be to the upside because we were so low. We were stuck at a very, very low rate. Actually, it might have been more than 5 years ago. What changed was we came off of those lows. So if you go back into 2020, I mean, we were stuck, we're pegged near these lows. It was a brutal time. We had very low yields. So when you buy something like TIPS, it makes sense to buy TIPS because as those yields increase, the TIPS earn you more. Well, here we are in a scenario, and this is, you got to put yourself in one of the two camps. Are you in the Big Ebb camp or are you in the Merlin camp? Merlin camp is saying, and probably wrong at this point, I'm almost conceding now, that yields should continue to move up simply because to get the yield curve to be normal, we would need to have that long end of the yield curve move up, right? That's to get that yield curve back to normal, which is where it should be. So my hypothesis, my prognostication here is that this will end up moving to the upside. If that's the case, then buying TIP would probably be a good move. However, if we start to see aggressive rate cuts from the Federal Reserve, and they're saying, "Hey, we're gonna short that, we're gonna drop that low short end of the yield curve," that could actually start to bring the long end of the yield curve down even more. And if that does happen, then your TIPS will be losing value because of the adjustments to the long-term rates. So, just something to think about. In my mind, TIPS are a tricky animal. If rates are historically low, then going long on TIPS is probably a good idea. The other way around, if you feel like rates are going to be dropping, TIPS are not the thing to be buying because you'd be losing money as those rates. Kind of like anybody here has been in the I bonds. We had great period of time where the I bonds were up over 9%. That was great. I got 6 months at 9%. And then all of a sudden, boom, drops and drops and drops. Now we're getting much, much lower rates. That's because it's tied to inflation. And as inflation continues to drop, we will see these potential bond yields drop as well. Of course, the TIPS means Treasury Inflation Protected Securities. So it's tied to inflation, not just the yields here. But of course, when I'm looking at the yields, I'm assuming that as these yields fluctuate up and down, the interest rates would be adjusted to that because of inflation factors. So as inflation, as we've seen with core PCE as well as the CPI numbers, inflation has been dropping. The value of these TIPS has been plummeting. It's not looking good. If you expected inflation to start to surge again, then your TIPS would do great. All right? But these bond funds help you kind of tailor that one out. Again, if you felt the long term was going to be rallying, then maybe you want to go on TLT because that would give you better yields going forward. What did Mike say? BLV is long-term bond fund ETF, which I buy. Okay. Mike, if Trump wins, no taxes on TIPS, so it makes sense to buy. Well, did he say that directly? Did he say no taxes on that? I mean, look, as Margaret and others pointed out in this discussion a couple days ago, everybody's going to say everything that you want to hear, right? I mean, Mike, you may as well just come out and say, free Teslas to everybody who wants a Tesla if you elect me for president. And then I come president, it's like, well, sorry about that. I couldn't make that happen. You're going to hear a lot of irrational claims. It certainly would draw more attention to TIPS if there was no taxes on them. It makes some of these taxes both state and federal. Oh, that would be great. Of course, there are different bonds out there. Renatino, would you say August will be a month of profits for gold and U.S. indices? Well, historically, September's the worst month of the year. And it almost feels like we're kind of setting that up and moving in. Oh, did he say that? I didn't catch when he said that. Thanks, Big Eb. Trump said no taxes on TIPS. Small case, not TIPS. Oh, got it. That makes total sense there. So TIPS, guys, in that sense, TIPS means for waiters and waitresses. Your bar staff, when you give them a 20% tip. TIPS, all capital, would be TIPS. That's what we're talking about. So very different. Good. Thanks for the correction there. I'm too slow, Mike. My brain's fried from trying to get ready for this trip, so I apologize if I didn't catch the joke there. That was good. I get it now. But I try not to listen too much to what these candidates are saying. I did follow what they said for the Bitcoin conference because I was watching that. But anyway. All right, let's run through what happened out there today, just so we can get some of this out of the way, and then I will get to Renatino's question about gold and the indexes, about what the September is going to look like. I want to make sure I get through the numbers here before I forget. So here's what we've got for Bitcoin. Again, I've had multiple ideas on what's going to happen with Bitcoin. There is a little bit of a soap opera happening right now. So I expect there to be a sell-off as the Mt. Gox thing came to fruition. Those coins were distributed. They've been distributed. There was a little bit of an impact, but not much, right? We fell about 16%. Then the German government sold all their Bitcoin, and we absorbed that, and all of a sudden we're starting to rally. Now, because of the comments that were made by Trump, this is why just politics drive me nuts. Because of the comments that were made by Trump and by Kennedy at the Bitcoin conference, and those two both said that they would take the current Bitcoin holdings, which I thought it was 244,000. Some people are telling me it's 210, but I'll just keep saying 244 until I'm totally proven wrong. Taking those 244,000 Bitcoin that are part of the U.S. Marshal Service and moving those into the Treasury as a strategic asset for the United States. Both candidates have said that, and all of a sudden, was it $3 or $4 billion worth of it has moved on to exchanges ready to sell. So it's almost like our current administration, the Biden administration, is saying, you guys are going to do what? You're going to move that over? Oh, really? Well, we're going to sell it before you guys take office. So this could be a wild card for Bitcoin that ends up pushing it down if this really happens. I would hope it doesn't. It's just such a ticky-tack move. But you notice that over the past 2 days, when that thing moved, instantly we saw Bitcoin start to take a little bit of a dive, and it's a second day in a row of sell-off here for Bitcoin. So, we do have a couple of interesting points. This was the long-term demand zone for me on Bitcoin, which is down around 52,670. We had the shorter-term one where I expected it to bounce, and it conveniently did at 64.8. And I expected it to come back and smack its head in this high, and we've actually been hitting all these levels. So, man, been great time for active trading, which I do not do in Bitcoin, but certainly respecting the supply and demand zones. Now the question really is, does this hold, and do we see this continue to move back up and go to the upside? I personally do think it will go up and break the high and move up to the upside. Okay, that's my thoughts on Bitcoin. But today, down 2.17%. Crude oil. I did sell puts on USO today. $71 strike price. I can show you that here in just a second. But crude oil broke through that little area of demand, now coming to the trend line on this crude oil chart, which it goes all the way back to those December lows of 2023. And, my talk track to you, which I'll put my money where my mouth is on this one, is you have this demand zone, which it actually held for 1 day and then gave it up today, trending down. And I think that trend line's at next stop. So just so you know where we're at, USO. I did the $71 strikes, which is down here, which is an area that I would be okay buying at. And that's for August 16th. So it's, the premium was fine. The premium was actually pretty good for this. It was over 1% for more than, for just over 2 weeks. Here is the 16th. So I've got until that cross of price right there for these options expire worthless. Great. Fine with that one. Right now, it does not look great, but I don't think we'll get all the way down to $71 by the 16th of August, which is why I sold the puts and, take a little bit off the table. NASDAQ, man. NASDAQ looks like it could be getting ripe for a further decline here. Again, it will probably drop tomorrow based off of Microsoft's, although I'm kind of torn. Microsoft's news, in my opinion, wasn't that big of a deal. I actually thought that their earnings looked good, but I do want to listen to or read the report of what they said at their press conference, because they may be citing AI just like Google did, and that could be further downside slide for Microsoft. Either way, again, we have 3 more tech plays over the next 2 days. Could be some great buying opportunities. I have a couple levels marked out there. It's certainly the 17,113 looks great from the longer term perspective, and that should be, how big of a drop would that be for Microsoft at this juncture? Bam. Yeah, that'd be about an 18.5% decline from its peak. Right now, as far as NASDAQ goes, we're down almost 10%. So we're having a nice little pullback here on the NASDAQ. All in all, it looks good. Marco says, does a put seller check his trades when he is in Ireland? It's an addiction, so I probably will look, but I'm not that concerned, right? I've got until the 16th, and I'm not that concerned about it. Today I did because I knew that CrowdStrike had a big sell-off after hours, so I needed to do something defensive there on that one, but I'm not as concerned with crude oil as I am with CrowdStrike. CrowdStrike has got bigger problems ahead of it. All right, S&P 500 is very interesting because we've been just kind of bouncing our butt off this lower demand zone, and it's done that like 3 times already. Today, long bottoming tail goes all the way down into it. If you're looking for numbers on that, it's right around 5,438.5 by 5,422, so a 16-point range there. The more that it hits this, the more likely it's going to break. So that NASDAQ tomorrow could put pressure on this. Obviously, Microsoft is a heavy component of the S&P 500. That could put a little bit added pressure on this, and we may see a breakdown below this, and that could be a good shorting opportunity for anybody looking for day trades tomorrow. The question is, at least this is the big question for me, is there a knee-jerk reaction that triggers more selling tomorrow, or do many people look at this sell-off in Microsoft as a buying opportunity for tech as a whole? So do we see XLK and QQQ get a bunch of buying pressure tomorrow, or does that kind of step back a little bit and wait on the sidelines until after maybe Friday, where we get those other 3 major players reporting earnings? And that's a question I can't answer, or the markets will tell us what to do. Les, thank you very much, my friend. I appreciate that. You are one of my number 1 fans. You're usually the first one in this room, so thank you very much. I may have to come visit you because apparently SpaceX is going to be moving out of California, which means I won't get to watch all my rocket launches out of Vandenberg Air Force Base, so I may just post up next to you and watch some space launches from your place. But thank you very much. I appreciate that, as always. Cheers, although it's water today. All right, keep moving on. That was the 5th place for today. The 10-year continuing its slide, drifting lower and lower. Big Eb's getting more and more excited. We're getting closer and closer to it. Not that far off. You've got less than 14 basis points. And again, it has to just hit that by the end of the year. At this rate, it looks like I'm buying him a beer for sure. I mean, the trend is your friend till the bend at the end, and this is a glorious trend right now. It's funny because when we made that wager, I think it was back here when I had this uptrend intact and everything was looking fantastic. Higher highs, higher lows was looking good, and all of a sudden, we made a new low right there. Really, everything switched on June 5th when we started making that new low, and now it's just been a series of lower lows and lower highs. So I got a channel drawn on this one. I expected to stay in that one until it doesn't. So Big Eb's getting more and more excited. More and more excited, I'm sure you are. 3rd place, Russell 2000, 0.35% gain today. So we're now in the positive territory overall for the day. Russell is just kind of hasn't had any big follow through, right? But it has been kind of building a base up here near the top. It hasn't had much big wide ranges like it did before. All of a sudden feels like it's consolidating, which typically means it's going to move to the upside. So I've got conflicting signs here. If we get big money flowing out of tech, Big Eb made a point. He goes, where's it going to go, right? If people start dumping Microsoft and Alphabet because of their statements on forecasts on AI expenditures, where's that going to go? It could very well go into small caps, which might be a big part of the reason why we saw this surge up in the Russell over the past month and a half. Dollar index, right now, not doing anything. Today had a nice little green candle, nothing too dramatic. And again, I don't really get any signs or signals from this market, the dollar index, as far as where it's going. So that's no big deal. Now, to the question that came through earlier from Ronaldinho, is gold. You know, where do we think it's going? Look, if this market does have a big drop, which, I mean, it very well could with Microsoft, Meta, and Apple reporting this week, and maybe some bad economic data or central bank comments, because we do have a central bank announcement tomorrow as well, you know, that could put more pressure on gold to the upside. You know, we did break out of this little yellow box I had here just for a couple days and then came back in. I thought we'd be drifting back down towards the bottom, and all of a sudden we just shot right back up to the top of it. So all in all, we've got a lot of volatility, which is what we discussed at the beginning of the year, and also increasing as we get near the election cycle. Where does gold go from here? I'm not going to take that bet. If anything, you know, you're going to go look to short it as it gets right into these highs, but I see a lot of potential pressure to the upside for gold. So it would not surprise me to see it rip through these highs we saw last week, which is July 17th. A couple weeks ago, July 17th, and that would put it at a high price to break through that of 2,488 is your high there. Now, if we look at something like SLV, it's got a much weaker looking picture. It's just not been able to charge those highs as gold has, so it's kind of fallen out of favor here a little bit. I hope it keeps selling off. I would like it to keep on selling off so I could potentially sell some puts on it back at that 2350, which is where I got out back in April of this year and have not jumped back in yet. Let's see. What else do I got here question-wise? Does not seem like gas prices are crashing like CLS. Yeah, they've kind of felt somewhat stagnant. I'm kind of surprised to see that. And maybe we'll see that change over the next couple of weeks here, Margaret. But yeah, I've noticed that as well. The gas prices here haven't fallen very much. But I'll be honest, I drive so little now. I pretty much ride my e-bikes everywhere, and I barely even go to a gas station. I'm probably hitting the gas station once every month and a half to 2 months. So, yeah, I don't drive very much anymore. I'm saving money there. Got a little V6 truck that doesn't get good gas mileage, but yeah, I'm kind of surprised that we aren't seeing it fall faster than that either. All right, let's see what else I want to get. There's some more questions here. Earnings with spread estimates on Microsoft are 301, and it's funny because Mike, every site has different estimates. Not that Zach's research is the best. It's just I like Zach's research layout. It's just simple and easy to use, so that's what I've always used. But yeah, I know Earnings Whisper. They all have different numbers. Tom says, rules of trading club, go ahead and fight the Fed, but never bet against Big is that the new trading rules? Never bet against Big M? I like that one. Tofi, no EV for me. I was trying to potentially buy a vehicle called the Go EV. Well, Go EV, it was called the Canoe. We've done many shows on that one talking about why I like the style of Canoe. It's something that's unique. Most people look at it and laugh. Well, that reminds me of my childhood. Most people just look at me and laugh anyway, so I want a car that reflects my childhood. We can look at it and laugh. I'm a form and function person, so I don't care about style points. I don't care about having a super fancy sports car, as a lot of people do. I could care less. It's a waste of money, in my opinion. Feed your ego by having a car that can do 200 miles an hour. Great. When are you going to do it? You get a speeding ticket. Good for you. That's why I'm a truck guy. I want to bet on my truck for utility, to move stuff around and haul my dog around, and four-person vehicle. The Canoe was an EV that did all that. So I was thinking about potentially buying the Canoe, but I have a feeling they may go out of business. It's been a rough road. Made some good money on their share prices, but the longer it goes, the more I dig into it. It looks like their CEO is just not the sharpest tool in the shed, and money's disappearing quickly. So no EV for me. I mean, if it was given to me, I might. Exactly, Lori. Buy what makes you happy that you can afford. Yep, and you should pay for it in cash. Unless you get 0% financing for an extended period of time, pay cash and don't take out loans against it. Let's see. Has Nvidia replaced Netflix in the Magnificent Seven? In my opinion, yes. Do I have it listed there? I think I may replace it on my list. So here's my Magnificent Seven list on the left hand or on the right hand side. Yeah, I've got Google at 1, 2, 3, 4, 5, 6, 7. So I have Google or Nvidia replacing Netflix in there. You know, it's funny because you look at the price of Netflix, it's definitely come roaring back. You know, again, I love this level because this is where Jim Cramer told you to buy it on January 3rd of 2022. And it took, from January 3rd of 2022, it took 2 years. Well, it took 15 months to get back up just to the price where he said to buy it at. And now he's probably gloating. See, I told you to buy it. Oh, man. Cracks me up. Okay, what else do you guys want to talk about today? We have, well, it's an early one. I got the questions out of the way. I got the bond fund pieces out of the way, which is an interesting one. And again, really, I think all of you, if you want to have bond funds in your portfolio, make sure that it fits your objectives and you know the risks of them. I don't personally hold any bond funds other than the I-bonds, which I'll just keep. Bought some I-bonds when the yields were great. Now those yields have dropped significantly, but it's okay. I'm fine with that. International markets. You know, I've yet to build my watch list, Margaret. My task for the week was supposed to build market indexes here. So I only have a couple. I've got the Hang Seng and I have the Nikkei, which are delayed. But if you look at the Hang Seng, for example, look at their exchange. Here's a daily of it, but let me shift this back to a weekly because it does do it justice to look at the bigger picture here. Here's your weekly. All right, so going all the way back into the 80s, beautiful uptrend for China. This is the Hang Seng Index. Looks great. And then all of a sudden, right here in 2022, it broke that long-term trend line and has been making lower lows and lower highs ever since. So at this point, it looks to me like the price of the Hang Seng is going to come back down towards these lows and continue to drift lower. Just based off what the chart is telling me, Margaret, it's just the trend is your friend, right? And you've seen this. If this was a tennis ball and it was back in February of 2001 and I dropped it, it fell, had a nice tall bounce. Well, it falls again, the bounce isn't going to be as high. So we got to see here if if you see these bounces continue to get slightly lower and lower and lower, that's just a sign of weakness in the Hang Seng overall. And you know, from the stuff I read, which who knows what is manipulated media and what's true or not, you know, China still has quite a lot of problems with their housing market and real estate, so that certainly could be a piece that brings them down. So not bullish on China's markets at all. Looks pretty bad. Now you would think, with the price of goods and services from Japan being so cheap, that their exchanges would be crushing it, right? That Japanese businesses would just be soaring, and lo and behold, they have been. So notice how closely this ties to the USD JPY. Let me see if I can add that on top here just as a reference. Let's add. So this is the Nikkei that we're looking at. Let's go USD JPY, and I'll add a currency futures on there. Whatever, doesn't matter which one. Yeah, we'll just go USD JPY futures, and we'll add that in. Oh, same percentage scale. Let's try that. Well, no, does not look like it. I wanted USD JPY. Well, the point I was going to try to make here is that USD JPY is, over the past couple of weeks, it's had a pretty aggressive sell-off, right? Let's go day. Over the past couple of weeks, it has definitely had a pretty significant sell-off, and that's impacted the Nikkei. So here is the USD JPY, right? This sell-off right here shows that the yen has been surging in value. And we talked about this before, which is when you have a real weak currency, it's designed to boost your economy. So when the US dollar was real cheap, right? When the dollar was beaten down, foreigners could buy a lot more goods and services. They could buy a lot more gold. They could buy a lot more oil, and you know, definitely impacts commodity prices. Well, Japan's currency has just been falling like a rock until they started doing some intervention here. And as they do intervention, that's designed to push that currency back up. Well, their markets have been doing great because of it. You look at the Nikkei here. Long term, Nikkei's been looking absolutely fantastic, but now all of a sudden, because of the stalling out of the yen and the decline stopping, and now moving back to the upside through manipulation, you're going to start to see this Nikkei drift lower. Now, personally, for me, what I do expect to have happen here with the Nikkei is I expect this to come back down into to a demand zone, if you will, right around, let's say, 37,000, and then start to move back to the upside. Because I don't believe that a small intervention is going to change the course of the Japanese yen. It will slightly impact it now, but it's going to take more and more and more steps to stop that currency from falling as much as it has been. It's just kind of the trend of it. So given this chart, which looks far better than the Hang Seng, I think that the Nikkei will probably continue to the upside, and pullback should be looked at as buying opportunities. However, the big wild card is more intervention. If the Japanese Bank of Japan continues to come in and manipulate this and support their currency and push it back up, then you're going to see the Nikkei drop even more. All right. So really, that's the only two I have on this list. I could bring up Indian markets, but I'll create an index list of international markets so we can do that more often, because it is interesting to see, how at face. I think if we step back here and just look at the states, like, okay, we know what's happening in the United States, but what's really going on in the Chinese stock market or Japan or European exchanges? Nice to step back and look at that as well, because that is a reflection of economic growth, prosperity, or just decline. How should you apply the VIX? I don't apply the VIX. I'm not a fan of it. Back when we had our huge market crash and the financial crisis in 2008, to me, it broke. VIX didn't work. The general rule of thumb with the VIX is there's a mantra that says when VIX is high, time to buy. When VIX is low, time to go. And they've used historically these two numbers, 20 and 40. These were the metrics that most traders used when I was getting started as kind of the parameters. So when VIX is low, time to go. And basically what that means is anything below 20, you should sell your long positions. When VIX is high, time to buy. Meaning if VIX is above 40, just looking for buying opportunities because markets have crashed. But does that really work? I mean, look how long it's been down below 20. I mean, a couple times it's tiptoed back up, but it's just been staying there. Why? Because the market's just been trending strong to the upside. So I think this will get you out of a long position that you shouldn't get out of. Now, if we flip this a little bit and look at the other side, look when we had this huge break. Here's the problem. This is why I don't like VIX. If we look at the same mantra that I just talked about, let's just play the hard red edge, right? I love the game, the hard red edge. Let's say right here, we had that level of 40, right? Remember, VIX is high, time to buy. So as it breaks above 40, if you follow this mantra, you would go out and start buying the S&P 500. And that would have been on, I'm going to just put a date here, let's see, 2/28 of 20. That's when you would have been buying this market, to February 28th of 20, because it broke above 40. But then it just kept on going. And by this point here, you're probably broke, right? And if we look at what the SPY did, and let's go back to that date, which was January 2020. Depending how long you survive this one, right here, I'll put a vertical line on where we were on the 28th of January, because that's when VIX told you to buy. It's February 28th, excuse me. February 28th, so right there. So from that point, you would have had to have endured a decline in price of 24.4%. Now, in hindsight, hey, it was great because we've just ripped to all-time highs and things look amazing since then. But, do you have the intestinal fortitude to weather that kind of storm? I'm not a big VIX fan, obviously. I'm not a fan. I think you could use it, but you should be using market behavior as a more important piece. But understand that VIX does give you an indication of fear in the marketplace. Stop loss. Hello, you're right, John. But a lot of people refuse to use stop losses. All right, Chio. So Merlin, could you do a topic on what percentage of your money you would invest in, such as ETFs? I kind of don't want to do that one, Chio. And the only reason is I don't want people to mimic what I do from a couple different perspectives. Number one, it may come off as financial advice, and this is not financial advice. I'm just showing you what I would do. However, some people could misconstrue it that way. The other part is I'm not your typical person. I trade very differently. Do I own any bond funds? If you go by the historical formula of what percentage your portfolio should be in bonds, right? If you go off that formula, I should have over half my portfolio in bonds based off the metric that most financial advisors use. I don't have any other than, I think I have 10,000 worth of I bonds. That's it. That's nothing. So I am much more aggressive and I am much more heavily weighted towards the equity side of things, predominantly because I'm well versed in how to handle all that and take the risks associated with it. Exactly, Margaret. Yeah, remember your age minus 100 minus your age. So if you're 70 should be what percentage you are in bonds. 70%. If you're 20 years old, 20% of bonds. Basically, I don't know why they did 100 minus your age. Just say take your age. That's your percentage you should be in bonds. And I don't think that that's the right model for everyone. I think everyone has different needs, right? You have different needs for your money right now, for your needs for your money in 5 years. You have different growth rate needs. So I typically don't like to go through specifically. What I could do is I could do a show on Lori says I'm 0 years old. All right, she said no bonds for you, Lori. I like that. What I could do is I could go back and talk about how historical financial models are built, right? What do these historical models look like? I could do that, but it ain't gonna happen today. That would require a bunch of work for me to get all that done. Let's see. What is a good argument as to why crypto will make new all-time highs? I can see Bitcoin, Ethereum, and Solana doing it, but others. Typically, it's the rising tide floats all boats argument. So if you have Bitcoin, which the math numbers just scream that it's going to be going higher to me, that will bring up more money into it. Brings up more money into the whole ecosystem. And once you have money in crypto, it's almost, they say marijuana is the gateway drug, right? Oh, if you try marijuana, next thing you know, you're doing opium and cocaine, whatever. In crypto, it's just easier once you're in something to go, oh, you know what, I'll sell some of this and just buy some Ethereum or Solana. And I think you start to bring up all the other cryptos. What I hope happens in the next couple years, okay, this is important to me, is I hope that most of the garbage that's out there disappears. The Shiba Inus, the Dogecoins, the Bonk, the Dog Whiff Hat, the Pepe coins, all of these need to, and millions of others need to disappear. They're a black eye on the industry, in my opinion. You look at legitimate projects like the Onyx blockchain for JP Morgan, that's using Avalanche. Legit project, legit ecosystem, developers, real business applications. That's legit. Whereas Dog with hat is some stupid picture of a dog wearing a hat and people think it has value. It's like, if I could slap you, I would. That's the definition of stupidity. However, people want to, trade those types of things, and that's fine. So that stuff will rise up with it, unfortunately. But over time, they'll all go to zero where they belong. So that's why, when I built the crypto program, it's really about understanding what we're buying, why we're buying it, knowing its purpose, and saying, okay, I've removed a lot of the external risk factors by understanding this company and seeing where it's headed. And it may not achieve those goals, but at least I have vetted the portfolio that I own to cater to my objectives and goals. Let's see. That model is outdated for today's market environments. Totally agree, but they still use it. It's funny. I have a good friend of mine who I'm looking and helping him with this stuff. He's got two different people telling him completely different things. One says be 100% stocks. The other one has him over 50% in bonds. And he's like, well, which do I do? I was like, well, that's up to you. You can't say one side is wrong. And it's just a matter of opinion about allocation. So yeah, we live in a day and age where I think it is important to sit down with someone and say, what are my goals and objectives? What do I need to try to attain from my portfolio of investments, whether that's income generation or long-term capital appreciation? Those are things that we have to each take into heart because it's going to be different for all of us. Come on, listeners. There's only 5 likes today. I can't even see the like button, but thanks for the cheerleading, Mike. Thank you, guys. What is going to give all these coins legitimacy if there is no government behind it? Well, there won't be any government behind any of them. What you're going to get is you're going to get product adoption. So, for example, I've mentioned Live Peer before, which is a very unique product that is very different from others that exist today. As more people utilize that technology and utilize that platform, it gains adoption. And then that's what gives its legitimacy, not government stamp of approval. What the government needs to do is say, these are the guardrails of what you can and cannot do in crypto. You can't create a shitcoin and just out of thin air in 7 minutes and pump it online. That's fraud. You can't do that, right? That needs to be brought up. But can you build a project that actually has applications and you can prove that it's got development teams and resources behind it, it's not a pump and dump scheme? Then you should be able to develop your product and promote it. So it's not about the government. It's more about adoption of different technologies. And in my mind, it's more about disruptors. So you have multiple layers to this onion of digital assets. The number one layer, from my perspective, is upgrading the current financial system, whether that's a central bank digital currency or setting up payment rails for banks to communicate with all other banks transparently, much faster, and much cheaper using blockchain technology. That's the easy upgrade. The next step would be empowering you and I to do the same thing that the banks are doing without needing a bank. So for example, if you had $100,000 worth of money, you could say, all right, I can put it in my Chase Bank and make 0.01% interest for a year. Woohoo! Or I could go and buy a USDC stablecoin, put it into a lending protocol, and lend it out to somebody at 4, 5, 6, 7%, depending on who that lender is or who I'm lending it to. We can now do the same thing the banks do and vet the end user and see if they're worthy of this loan. And why shouldn't we be able to do that? Because banks have that monopoly. Financial firms have that monopoly, and those barriers may be breaking here soon because I do think that the upgrade is coming to the financial system. All right. 2 words. I won't say that one, technician. I've been watching, following her on social media. She's pretty funny. Is dollar cost averaging valid for stocks and bonds? I wouldn't say for bonds, and I guess it depends on your time horizon, Margaret. So I don't believe that dollar cost averaging is good for individual securities because what it means is you're wrong on the trade and you're hoping that trade is going to work in your favor. History has proven that dollar cost averaging actually does work because that's what 401ks are. 401ks are dollar cost averaging. Again, if you're not touching it, then yeah, dollar cost averaging, because you know it's going to be over the course of 10, 15, 20, 40 years, markets are going to go up at some point. I do personally think you should take a little bit of market timing and add that to it. We talked a couple weeks ago, someone was asking about buying these positions. I'm like, man, we're at all-time highs. I'm not buying anything right now. I'd rather wait for it to drop back down, buy at a lower price, and therefore save. I mean, think about it. If you were hesitant on buying Nvidia, right? You just, no, it was at all-time highs. It's too expensive. Well, you've got a significant pullback now. You could buy Nvidia today 26% cheaper than you could have a month ago. That's a massive savings. I mean, imagine, guys, if you waited a month and you bought your house 26% cheaper, or your car 26% cheaper, or heck, your groceries for 26% cheaper. I think we'd all line up to do it. So this, to me, is a much more valuable to sprinkle market timing on to the typical dollar cost averaging theory. And I think you guys should, if you have 401ks, you should be doing it as well. You know, when you have a market that goes absolutely parabolic and then pulls back and starts making some new lows, just go to cash. Go into a bond fund, a SHY or something, and let it slowly grow while the market falls apart, and then buy back in 10, 20, 30% cheaper. That's what we should be doing. Anyway. So yeah, I don't dollar cost average myself, but if you're looking for long-term investments, that's what 401ks and IRAs are. It's built off of dollar cost averaging. I think right now, crypto is probably a better way to dollar cost average because I have no idea what the next few months is going to hold. But just from a simple math perspective, I look at Bitcoin, those numbers, the math equation tells me it's going up, particularly with what we have going on with the presidential candidates right now, with 66% of them very pro-Bitcoin. If we can get the one more candidate on there and have 100%, we're rocking. We are off to the races. All right, guys, that's going to do it for me. I want to get out here before it's a 1-hour show. Thank you guys so much. I apologize I got to take some time off again, but, do it while we can before I'm unable to travel because of anxiety issues or whatever the heck it may be. So I hope that you guys all have a fantastic remainder of the week without me. Be careful. Tomorrow you do have, again, earnings. I will show you that here real quick. I'm going to try to keep it under an hour show. But you've got Boeing, Qualcomm, MasterCard, and then the big daddy Meta will be reporting earnings tomorrow after market close. And your economic calendar, of course, which I don't have open here, but I will drop that one in right now. Your economic calendar, you know what's coming up tomorrow. You have an FOMC announcement. That's going to be a biggie. Not necessarily the number itself. Right now, the expectations are it's going to stay right where it's at. Here we go. Let me take off my filter here, remove that filter. So here's what's happening for tomorrow. You've got a ton of stuff. If you're trading the European Union, trading the euro, you've got their CPI numbers coming out. You are also looking at the GDP numbers for Canada. The U.S. has ADP non-farm employment change. You got pending home sales, and of course the FOMC statement, which is expected to stay right where it's at 5.5%. Again, pretty sure the cuts will come in September, but not this meeting. So listen to the press conference after. That's going to be at 11:30 Pacific time. That will be the fun one when he makes a statement about, gets grilled by all these journalists and see if he makes any blunders there. All right. Thank you guys so much. Nope, I have an Indigo. It's going to have, I'm still working several different angles for this announcement, if you will. Not sure which way it's going to go or what's going to happen, but I'll probably do that after I get back on my vacation. So I have several conversations I need to have. But yep, I will have a great trip. Thank you guys so much. Hope you enjoyed today's show. As always, hope you learned something. Hit the like button. I'll see you guys on the 9th of August. Take care, my friends.